Bitcoin saw a massive rally in the last 24 hours amid investor optimism over spot Bitcoin ETF approval. This comes as Galaxy Digital CEO Mike Novogratz recently said on CNBC that he thinks the spot Bitcoin ETF could be approved as early as this year. Joining us now to discuss is the head of Firmwide research at Galaxy Digital, Alex Thorn. Welcome to the show, Alex.
Yeah, thanks for having me. Great to be here.
A lot of ETF excitement going on here in Washington and elsewhere as displayed in the markets. What do you make of this rally? Do you think we're going to see an approval this year?
I do think we'll see an approval this year. I think there's very high likelihood. I mean, we can't know for sure. Obviously, analysts are predicting that like even by January is a high likelihood. I think the rally is there's a lot of pent-up anticipation. There were a lot of people that were not positioned well for the rally, I think, in general. There were also some interesting idiosyncratic market factors that helped cause explosiveness in the market yesterday, particularly a large portion of the options market and the dealers being short gamma, which causes them to need to buy spot Bitcoin as price moves higher, which I think contributed to that real explosiveness you saw. But broadly, I think a lot of people realize this is a great time for an ETF. The issuers that are applying for it are mature and ready. The market structure has improved and matured significantly, and investors want it.
A lot of analysts and market watchers really think that the approval or the hope for an approval of a Bitcoin ETF will be the next catalyst for a bull run. Do you agree with that? And what else are you watching?
Yeah, I think, we did an analysis we actually published today that suggested, and this is based on very conservative assumptions, that we could see about 15 billion in initial inflows in the first year to generic ETF products, right, regardless of which they are, how many. And that goes up to 26 and then 38 billion of inflows in years 2 and 3. That's, I think, actually pretty conservative estimate, but I honestly think from a catalyst standpoint, that is obviously huge. Think about this, there's a giant segment of investors, particularly in the wealth management sector. It's 47 trillion of AUM in the US alone that really don't have access to give their clients exposure to Bitcoin, right? They manage maybe accounts for hundreds of clients, portfolios. They're on perhaps a bank or broker dealer platform. They can't access, say, the trust products that exist, or the cash-based futures are not suitable for their fees or roll cost or decay or whatever. And they don't really have access. So I think that alone represents a huge total addressable market for Bitcoin. I would just point out also on the calendar, you have the Bitcoin halving in April coming up next year. I think in absolute terms, like the actual supply reduction is pretty small at this point, but as a narrative event, which last time, of course, in May 2020 coincided with historic levels of monetary easing, really could make Bitcoin shine in that environment as well.
Besides the ETF approval, any other regulatory catalysts, or what needs to happen from a regulatory perspective to help the TradFi players feel more at ease operating in the crypto sphere?
Well, I think there's obviously there's a bunch of stuff for the broader crypto complex, right? There's stuff from the SEC, there's stuff from FinCEN, there's proposed rulemakings, there's legislation in Congress. I think when it comes to Bitcoin in particular, some of the main thing I think on people's minds today is its use in illicit finance, following the attacks by Hamas in Israel, and some reporting, I think, in my view, incorrect reporting that they got a lot of money from Bitcoin. I think a lot more education has to happen to explain not only what the real facts are about their use of Bitcoin, but also suggest real, strong, viable policy options that can help prevent the use of illicit use of cryptocurrencies like Bitcoin. No one wants to see that happen, but that is top of mind right now in Washington.
Yeah, it's interesting you bring that up. We had Senators Lummis and Gillibrand on the show earlier speaking about illicit finance and crypto being used for illicit finance. What kind of misconceptions, or maybe unpack the misconceptions a little more for us, and why do you think that that's so sticky when it comes to the crypto conversation?
I mean, it's a potent narrative, right? I mean, no one wants terrorists or anyone else bad to have money in general to fund their operations. So it's pretty easy to bring that narrative up. There's no doubt that bad actors use cryptocurrencies, like they also may use cash or other instruments. I think in general, the criticism of Bitcoin as a great currency for illicit finance is very misguided. Bitcoin's the most traceable currency ever created. When you talk to the professionals who do forensics in the cryptocurrency space, they tell you that the numbers are much less than some have argued they are in terms of the amount that's used in illicit finance. Tiny percentage of also transactional volume on these networks, probably smaller than traditional cash instruments, right? So I think there's misconception both on the actual empirical data, but also on the theory behind it, right? Most investigators you talk to will tell you that it's very, it adds a lot to the investigative potential for an investigation when criminals or bad actors use cryptocurrencies because of the permanent traceable record of the public blockchain.
Do you think we're going to get crypto legislation this year?
That's a good question. I don't know.
It's been the question of the day.
I would say, I think it's just given the calendar. I mean, in particular, we're pretty close to the end of the year, right? There's questions about, right, we have a potential government shutdown again looming ahead of us. We don't, at the moment, have an elected Speaker of the House. So I would say most likely not. Particularly the comprehensive types of legislation we've seen, whether it's sort of a comprehensive regulatory package or like maybe stablecoin legislation, those are pretty big deals. I just don't see that getting done. I think there are some items that are smaller that could get added to something and could become law, like the Proof Act, which I think we're going to talk about.
Now, you bring up the fact that we don't have a Speaker of the House. We learned recently that Tom Emmer is a Republican nominee. Of course, he's crypto-friendly. We've had him on CoinDesk TV a bunch. Do you think that might help accelerate legislation?
I think Representative Emmer is a great advocate for the cryptocurrency industry and just financial innovation in general. He's also one of the most knowledgeable of the technology and the impacts that it can have, positive impacts it can have for financial services and capital markets in the United States. So it can only help, I think. In general, I mean, we just have to wait and see. I don't think it's going to, again, just the calendar is very constrained at the moment for the rest of this year, but it can only help if he's elected.
All right, you brought up the Texas Proof of Reserves bill. You've been following that quite closely. Talk to us about what's going on there.
Yeah, so actually this is the Proof Act that was just introduced in the U.S. Senate by Senators Tillis and Hickenlooper last week. Texas has already passed, I believe, a Proof of Reserves law, which is great. So the Proof Act mandates that any entity that custodies crypto assets on behalf of a customer, right? So that would include clearly like crypto exchanges, custodians, that they submit on a monthly basis a cryptographic attestation of assets held under custody, combined with a formal audit of their liabilities. And it, I think, would add significant consumer safety and transparency to the industry. And it would directly address, I think, some of the blow-ups from last year in ways that some of the comprehensive legislation sort of get at, but this is much more direct. And I really, in particular, really applaud Senators Hickenlooper and Tillis for coming together and acting here, because this is something that is an industry best practice, but this bill would really put standards around how to do that and bring that safety to Americans around the country. All
right, we got to talk about the IRS. We haven't talked about taxes on CDTV all day. They recently proposed a rule to define crypto brokers and how their customers should pay taxes. You noted back in August that the IRS Broker Rule proposal puts DeFi in a tough spot. Talk to me about what you mean.
Yeah, so the broker rule was part of the 2021 infrastructure bill debate. You may remember in August or so of 2021. And it got added, and it expanded the definition of a broker to include potentially crypto asset related entities. And then the IRS now has proposed rulemaking around that new authority. I would say generally this requires that certain types of crypto asset entities be considered what's called a facilitative service. So this is an entity that helps other individuals facilitate the trading of assets. And they'll be required to submit both to their users, but also to the IRS tax reporting on their users' basically profit and loss, which is what, say, traditional brokers do, right? I think the issue is to do that reporting, you have to know your customers, right? You have to be able to know who they are. You have to trace them, and most of DeFi doesn't have, or even can't have, by the way it's designed, this type of reporting. And I think it is possible that as you'll see different classes. Again, it depends on the specifics of how these DeFi platforms operate. I think if you launch something like Satoshi Nakamoto, no web front end, non-upgradable smart contracts, no fees, no DAO, I think that's probably not a facilitative service. But most of DeFi today doesn't look like that. And so I think it has the potential to create effectively a great American firewall where some projects that either can't or decide not to comply become only move offshore in some way, versus others start adding KYC to their web front ends or even potentially at the smart contract level. I really encourage people to go look at the proposed rulemaking from IRS because they go into great detail about different types of examples of DeFi applications that would or would not be a facilitative service. It's quite detailed. So it's not a lack of clarity that's the issue here. It's perhaps the potential sweeping nature of it and the imposition of reporting requirements that perhaps large parts of the industry, of the on-chain industry, can't actually comply with.
All right, we got to wrap, but quickly before we go, we've mentioned a lot of different areas of this industry that is looking for more regulatory clarity. We talked about DeFi, we talked about stablecoins, we talked about illicit finance. In your opinion, just before we wrap here, what's the most important topic you think regulators should be focusing on?
I really like the Proof Act's thrust on consumer safety. I think this is ensuring the solvency and transparency of the platforms that people actually use in the United States does more to prevent the types of blow-ups we saw like FTX than almost any other proposals I've seen. So I hope people can get behind that.
Alex, thanks so much for joining us on this special episode on CoinDesk TV.
Yeah, thank you so much.
That was Galaxy Digital Head of Firmwide Research, Alex Thorn.